If you are looking for a new edge to your trading, and especially if you like using technical analysis, you can do far worse than using Renko charts in your trading. They're a great tool for taking out the noise, making the picture a lot clearer. And in this video I'm going to give you 6 trading strategies for you to go away with, play, adapt, make them into your own, and hopefully make your 2023 a profitable trading year. So with that, let's get into the detail. Just for the record, I'm going to keep all these 10 strategies simple so you can pick them to pieces and develop them into your own. Remember, these are ideas. Test them thoroughly before implementing them. Now, first up, a trend following strategy. And as you can see, we've got Tesla here. This one's very good on stocks, especially because they're more maybe a longer term play than some of the other markets you might be trading using Renko. Now, like I said, it's trend following. So what have we got in terms of indicators on here? We've got 2 moving averages. The purple one here, that's the 200 moving average, and that blue one below it, that's the 50. And below that we've got a modified DMI. Now what have I done? I've just taken the ADX out of both of them. We've got a slow DMI and a faster DMI. The slower one is a trend filter to get us in, and the quicker one is to get us out. And if we want to see the inputs on those, you want to know what I've used to build them, well, just set it to the standard 14 for the slow one, and on the fast one I've set it for half of that at 7. Now the block size I've used here is $3.50, and you can check out my other videos on how to set up block sizes. I'll put a link at the end of this video to the relevant playlist that you need. But let's get into looking at the examples on how this strategy works. Well, we wait for the price, and we can clearly see that the price has been down, but we'll go through the idea anyway. We wait till the price breaks down below the 2 moving averages. We then check off our longer term DMI, which the red is above the green, that's the minus above the plus. That is our entry signal. Now, how do we get out of this trade? Well, it's trend following, so we wait for the faster one to cross over and change directions just there. So when that became bullish, we got out about here. So we've got a nice short trade to the downside, and then we wait for the reset. You could be, more risky if you want to and jump back in on the next cross, which would have got you in this bit, but often you can get cut out of the trade. So we wait until the reset, the price has come back down and actually closes through here. We check our setup. Yes, we've got the slower DMI as a bearish signal. We get into the trade, and where do we get out? We look along the faster one, and actually it's only a short term one here, and we get out around about here. So a few nice blocks taken there, and as you can see, actually we did miss out if we followed those strict rules on that down move there. But like I said, if you're feeling more risk takey, then maybe on those next crosses you could get back in if you really wanted to and confirm with the price below that 200 moving average. Like I say, this strategy, quite simple, works nicely on, say, stocks, commodities, those longer term types of play you might be interested in. So next up, we've got a mean reversion strategy for you. Again, quite a simple one, but the key to this one is we need to find markets that are range bound. And here I have the S&P 500 set to a $10 block size, so it's quite aggressive. As you can see here, for the last month or so, the S&P has really been stuck in this sort of range here between 3775 and 3925, and what we're looking for is this sort of price action, that lovely bouncing between what I've got on here You can see those light blue shade lines. That's just a standard Bollinger Band setup, and it's got its mean average line there, which is the standard settings. We'll just have a quick look. There they are, 22 and 0. There as a guide to those sort of trending sideways range bound price action. And how do we time our way into the trade? Well, I've got something called the Laguerre RSI on the bottom here, and all we're looking for is the price to reverse back towards its mean, and the mean being the middle Bollinger Band line there. We've got the 2 standard deviation moves, so it's getting to the bottom, and then we want it to push on up to there, where you could take off some of your profits, and then you wait till it gets to the top and you close out. But the exact point of entry is when we cross here, we confirm with this cross of the blue, light blue moving average there, which is again quite fast and aggressive, set to 7. We then put the trade on, and we can let it go up, and as it hits the band we can close out, or we can wait until it comes back through that moving average line to close out. So we're getting that trend within that 2 standard deviation Bollinger Band set up, and you literally just follow your way through the Laguerre RSI, all these trades accumulating in a nice point collection. Just show you the setup for the Laguerre RSI. Alpha 0.85, open, high, low, close 4 is the source. Just look for it in the indicators panel, type in Laguerre RSI and you'll find the necessary indicator. In terms of stop losses, you could maybe, say for our example there, put it under that turning point, or a fixed number of block sizes, or factor in the volatility of the instrument to give it enough room to move and make a decent risk return of the trade. But that is our mean reverting strategy. Got something mad for you now. If you're into the world of scalping, I've tried to put together an idea for you in that space. Fortunately, in TradingView, it's a very similar strategy to when I was going to put together for you here. So I've actually borrowed that, and if you go up to the indicators and type Renko strategy, you'll actually have a whole host of different strategies, but my one there, Renko strategy open close, and you can see that little symbol there means it's got a back test to it, and we can see that back test and it looks very smooth. It wins about 95% of the time. On $10,000 in the hypothetical pot here, returned about $500. So not a massive winner, but a very consistent winner. And if you're into screen watching or even programming to do this sort of trade, it could be a nice one to have sitting there in the background just generating cash for you. And here I've used it on the GBP US dollar currency pair, 20-point block size, and it is really very simple. All you have to do is wait for the reversal in the price. We clear that first block, we then put our stop at the bottom of that block, we get in at the start of the next block, and we get out when it's reached our 20-point target. So we've made 20 points, we've risked 20 points, so it's a one-to-one trade, but it certainly keeps you on your toes, and then you just sit there and wait again for that reversal back to happen. Like I said, we wait for that first block to complete, the stop loss at the top there, entry in there, close out there, and you just keep repeating that all the time until you've had enough, really. A simple scalping strategy. You can do that, I would suggest, on liquid markets, forex, some of the bigger stocks. Maybe that's a bit more risky. Maybe you want to think about the indices, they could be quite useful. S&P, FTSE, that type of thing. Maybe even WTI or gold in the commodity space. But there's a scalping strategy idea for you. Another simple idea for you now, using the concept of breakouts. We've got gold chart here, $5 block size, and as you can see, it's been trending up nicely, and that's important now because we've got our 200% period average there, and we are only going to look for buy signals above it and sell below it. So that's, remember, buy above and sell below. And the grey shaded area you can see is actually a Bollinger Band, but I've tweaked it slightly. I've reduced the standard input of 20 to 10, the standard deviation to 1, and I've offset it 5, and that's to create a breakout setup. And as you can see from the chart, if we are only looking for long only on the breakout, you can see quite clearly, you know, by doing that offset, how that creates these trades. And so we can pick up, if you add it up over the long term, a lot of points there. And another filter we got at the bottom here is the DMI. Remember that one from a few strategies back, but this time I've just changed the inputs to make it a real long-term trend filter as well. I've used a DI length of 200. The green's above the red, so that's bullish, and again that's what I'd be looking for in conjunction with the 200 moving average to get me into these trades. So if that's all bullish, breaks out above, wait for the block to close, then get on into that trade. And in terms of getting out of the trade, you could maybe wait, say for this example, till it pulls back into the cloud, or you could put a moving average on it and trail it up, and as it breaks on through, you could maybe close it out. And that way you're going to get some good, you know, you're going to let those trends run there, and those that go wrong, like this one here, actually would probably get you you know, maybe a small loss, of break even, you know, or maybe if you got excited, and you should actually have waited to get into that one before it pushed off. It didn't actually happen, but if you did get in by mistake and it comes back in, you close out and you've got a small loss. That's the risk management side of it. And stop losses, where you want to put in, where you could put it just in, say, let's look at this example here, maybe the other side of the Bollinger Band cloud, or if you want to be a bit more aggressive, you know, maybe sort of halfway into it if you used the middle band line as well on there. So there you go, that's a simple breakout strategy using Bollinger Bands, moving averages, and the DMI. Now, contrarian, what does that mean? Well, we're doing the opposite of what the market is doing. A great trader that applies this technique is someone like Paul Tudor Jones, who's been very successful. He's not so much a technical analyst, but I've tried to convert it into Renko technical analysis for you. So bear with me, I've got a couple of examples here. On the left, we have the VIX, that's the volatility index for the S&P 500. And on the right, we have the S&P 500, a quite aggressive one, 10 blocks. And like I said, it's set up for a contrarian point of view. So what do we mean by that? Well, if we see here on the VIX, as that goes down, what happens to the price? It goes up. So that's our contrarian point of view. So this is our tool to make us do the opposite in that space. Now, not a lot of people use this VIX index, so that helps us with our contrarian viewpoint because it's a sentiment, and in the contrarian strategies we're using sentiment tools as our sort of way into the market, and we can convert them into technical analysis quite easily. And again, at the bottom here we've got our Laguerre RSI, a fast and a slow one, modified, and when it turns red, that is actually when we want to be looking to be buying the S&P 500. So play around with the setup on that one. That's, you know, does work if you can get your hands on the volatility indexes, you know, across a lot of stock markets, the Nifty, DAX, Euro stocks, other US ones like the NASDAQ. There's quite a lot of options there. But another idea you might have, if you're talking contrarian and you want some sentiment, then you might recognize this from some of the analysis I do. This is a Icon-Ashi chart, but ignore that because we want this information here, commitment of traders data. It's a sentiment to which way round people are trading. You know, large commercials, yeah, if it's going up, we expect the price to go down. If the large speculators are going down, we expect the price to go up. So we can use something like these two you know, large speculators, large commercial detail, and then combine that with your Renko chart to get you in and out, maybe in a contrarian viewpoint to what the market has. So for our last strategy, we're focusing on news-based events, and this works quite nicely in the world of Forex and using the Renko charts. We're taking out the time, so in this setup I go down to either using the tick size if your charts will allow you to do that, or if you can't, say in trading view, then drop it down to 1 minute. We want fast priced action, very quick in and out trades. Now we can start here in, say, any typical website that offers you your schedule of these news events, because we're going to pick on these to watch our charts on. Now this is investing.com. It's a free to use service, and if you went across to the news tab and went to the economic calendar, for example, and you hit this week, I've highlighted by filtering all the major key events for the countries that I'm looking at. You can see the importance 3, so we've got that there, and you can see this is what's happening this week in terms of events. You know, it's the beginning of the year, so maybe it's a bit quiet. You can see on that holiday period there. Some interesting ones like the FOMC meeting minutes, and here's the big one. It's really good. The non-farms at 1:30 GMT time. All that action going on there. There's some other good ones from other countries, and really it's a simple process of lining up your chart with the setup you've got, the Renko chart, and waiting for the news to come out. And it's a very quick fire strategy, and you've got a few options, so we'll go through those now. Now this strategy is all about quick fire breakouts, so I think breakouts and that reversal back afterwards, because there are the two options. You can A, jump in on the breakout of the news, or B, you can wait for it to stop, you know, it's, you know, very spiky movement, and then jump back in on the reversal as it heads back to, you know, and this happens quite a lot where it, you know, started from. But another big thing to factor in is often it goes back to the trend beforehand and carries on, unless it is really significant event and then it's created a whole new environment. So you've got a few choices there to pick on, and I've got the euro US dollar in front of me, 10 pip size block, so it's really fast and aggressive. It's in trading view, so it's set to 1 minute, so those blocks are gonna peel off and stay very quickly, and often within 1 minute, you know, 2 minutes, 3 minutes, these events can all be over. So we need a lot of quick fire action on the charts, and we need to be able to, you know, execute this very quickly. And we've got our standard setup from last time using the Bollinger Band, so just presuming that this was a news event here, and we're making it up for this example, you know, we would look for the breakout in the direction of, you know, where it was going compared to the Bollinger Bands. We'd also, maybe we could put on, you know, trend lines with a stop order to sell in this example, so we don't have to be hitting the buttons. And in terms of targets, I would use maybe something like Fibonacci as a possible target zone for the trade that you're putting on. So let's just do this as a example. So that would be up and down side, and we do the reverse for the other way. So put that and then that, so it gives us some target lines, and you can play around with this before. You've got to get this set up before the news event. So when, say, we were using this break here, we would be out maybe at that low, or we would, you know, take it down to a certain specific target, or let it run, or take it out when it went back into the Bollinger Band cloud there. So you can use some other indicators to create a breakout setup as well. Now again, presuming that this area here was our news event time for the trade, just there, we could use something like this. This green line that you can see is actually Donchian bands with an offset, and you can find that again up in the indicators. I've set this to 10 and 5, and around about that news event, you know, breaks on down, we get in that trade. The problem with these types of strategies are really, you know, the news can go, you know, either way. So I'm using this as my guide to get in, and then closing out maybe when it's either moved maybe a fixed percentage down, or, you know, like I said, it's moved back into, say, these band type areas. Stop loss wise, you could maybe, for this short trade, put it above the top of that band, and you'd have ended up with maybe a 3-to-1 trade on there. So this is one to play around with and come up with a setup for you. You've got to be prepared in advance, like I said, with maybe trend lines, Fibonacci targets, and have a clear defined strategy. Are you playing maybe, you know, this sort of down move, which is the harder one to do out of the two, or are you waiting for it to come back up and you're going to buy back as it sort of comes back towards the mean of where it was trading previously? So they're the two ideas there, and find the tools and indicators that you think will suit and fit that setup nicely. But you do have to be quick. It is a risky trade, maybe one for the more experienced, but it can get you some quick, you know, fast dollars in the bank. So there you go, 6 trading strategies for you using Renko. But remember, they are only ideas, thoughts, suggestions for you. So please test them thoroughly. You know, maybe adapt them, change them, make them more powerful before you go live trading them. So I'd love to hear your thoughts, you know, on the Renko strategies and ideas. Do you have any others you'd love to share with us? Like I say, get them in those comments below. And if you want to learn more about Renko charts, I've got an excellent playlist for you to work your way through. It'll take you from hero to zero in that space. Really gives you a grounding in the world of Renko and how to use it. I'll put a link to that coming up just after this bit, but also another playlist you might be interested in. If you're new to trading or want to get into trading, learn about the psychology, the risk management, trade management, technical analysis, fundamentals, the whole lot, then we've got the ultimate free trading course, free on the YouTube channel. And you start from the top, work your way through, and like the Renko playlist, it's gonna turn you into a much better trader. And those two are coming up now.